Hey, good afternoon, everyone. This is Trader Tim from eminimind.com. Today is Monday. What day is it today? September 12th, 2016, and we're doing a market analysis video for the week. Friday, we saw a big sell-off, gap down and sell-off. One of the things that I've been talking about pretty much the entire time as we've been sitting up at this high around the 2175 is that once we start breaking swing lows, and this goes for all market conditions, not just when we're moving sideways, but when we break these swing lows like this, we tend to have these bigger body candles. So we break through the swing low, and then one of two things can either happen. We end up having bulls step back in, pushing the market back up, and you get a hammer. Or scenario two is the market continues down, trending lower, and we get these big body candles to the downside. The same can be said for breakouts and big body candles to new highs versus an inverted hammer. But what happens is, we get a lot of stop orders placed below swing lows, and when those start to break, those stop orders get hit, and then that starts to push the market lower and lower and lower. Interestingly enough, today we pretty much brought all of that back in terms of the sell-off from Friday. We didn't quite make it up to fill the gap, but the body portion was taken back by the bulls today in pretty strong fashion. So it'll be interesting to see now if we continue to roll over. If I were to draw from highs to lows, you can see that the market has paused right at the close, which is that 2151, right at that 50% retracement short. So, when we look at the next 50% long, and I'll clean this up a little bit, the short 2151 takes us down into the long, meaning the negative 23% target of the short lines up with the 50% retracement long. So we could see a nice rollover short scenario on the daily chart that takes us down into the long setup that ends up moving us higher. If we look at kind of the reaction at the 2151, you'll see we moved up to it. We had an initial bounce right off the 2151, and then we moved sideways right along it and closed right at the 50% retracement. So this swing high up here will be very important, as well as the high of Friday, that if we break it, it's very likely that we come up and close the gap. Anytime we break into kind of this empty space within a gap, it's more often than not we end up filling that gap. So the high at 56s and the high at 58s will be very important. If we break overnight, not as strong as if we break during the trading hours session, because there's a lot more volume during that time. So nonetheless, we're in a much better situation than we were, sitting up here in the sideways consolidation. If we look at today's chart quickly, we had some really good trading on the 512 tick chart. I mean, just looking at the chart, it's so much cleaner than it's been in the last couple of months. So that's exciting news. Typically in September, right after the FOMC meeting announcement, which is Wednesday the 21st, I believe, we typically see the market kind of the volume come back and the trades start to look a lot better and cleaner. Right off the open this morning, from lows to highs, we had a 50% retracement pull back and then just scream straight up to the target, and that's what we like to see for when we talk about nice clean entry to target. It's these kind of scenarios. Boom, the market establishes a trend off the open. We get a nice clean pullback. We can pull from trading hours only lows to highs, and then roughly 15-20 minutes after the open, we get that pullback, and then boom, a nice move 21.15s, or we'll call it 16s, up to 21.23s. So that's a pretty good move for a 512 setup. When you're considering the small enough time frame here, the ability to jump in for a 4 or 5 point move is pretty nice. So that's what we'll be looking at tomorrow during the live trading session, and we'll see what happens when we open up, if we start to move higher or drift lower. This week, Thursday, we've got a ton of news: jobless claims, retail sales, industrial production, and then Friday is options expiration. We actually have a quadruple witching. We also have futures expiration, options expiration. So it's going to be a big day on Friday as well as Thursday. Tomorrow's pretty quiet, so we could get a small body candle that kind of just acts as a rollover bar. So the market moved down. Today we moved up. Tomorrow could be a very small, tight candle and kind of a range bound day, and then we roll over from there and sink down to the 2086 level, at which point I'd look for long setups in the daily chart to take us up to the next target, 2240s. So that's where we're at, and if you want to join in and follow along, learn more about the trade setups and entries and targets and all the things that I'm using to trade day in and day out in the markets, feel free to join us, eminimind.com/VIP, and you can join the live trading session tomorrow morning. Thanks everyone, and we'll talk to you soon.